Forex Focus brought to you by IG. Going to be talking about the potential for a global recession here and why the US dollar market might be sniffing this out faster or first relative to US stocks or the traditional fear gauge here in the US, which is the VIX, monitoring stock option volatility, because we've seen some pretty crazy action in US dollar recently. And a lot of it has had to do with this potential for a global recession. We've seen a lot of bad data points coming out of China. And just recently, in the last day or so, even more news about how those numbers from China might actually be worse than they're letting on around their trade balance and their GDP estimates and everything else. And you could take a look at the stock action, S&P, even with the recent turmoil, had a rough couple of weeks here, up around 15% on the year. You go over to China and it's a totally different story. The stock market over in China down almost 10% on the year, underperforming by almost 30%. Chinese stocks are relative to the US equivalent here, large cap to large cap stocks. And you're seeing this start to transcend just China. It's been moving out to Australia and Japan, seeing some neighboring fear as well. And a lot of people, I think, wondering if this can take hold of the global economy. And you're seeing a lot of interesting action in US dollar around that, starting with the dollar making fresh multi-year highs against the Chinese yuan, breaking above 734 for the first time that IG actually has historical data for. IG, has euro dollar data going back to the 90s, has thousands and thousands of data points around a lot of these Forex pairs. And going back to 2015, we have dollar offshore yuan data, and we're right now at those highs that the data provides for. And you've seen a lot of rallies in this dollar market against yuan, and you're also seeing rallies in the dollar market, by the way, against Australian dollar, against yen, getting back to historical extremes for those Forex pairs that we do have even more data for. Now, where have these dollar rallies come in historically? Well, you can't help but look at the most recent one there, which was a hell of a rally for the dollar, correlating to inflation fears in 2022 there. You have another rally in the early part of 2020. What was happening then? Pandemic fears were increasing. And then you see big dollar sell-offs afterwards. Well, you'll remember that both the U.S. and global economy actually bounced back really well after that pandemic fear set in, and we got some more information around the pandemic as 2020 went on and into 2021, and you saw a lot of stocks make new highs in the later part of 2020 and 2021 there. Similar story with the recent inflation fear of 2022, stock market really ending that year on its low and the dollar market ending that year on its high, and then bouncing back this year and the dollar giving back some ground. Dollar almost becoming a little bit of a fear gauge, which historically it's not been. Historically, you look at correlations between the stock market and the US dollar market, and we have here US dollar S&P 500 correlations, and looking at the span of time from around 2013, 2014 until the pandemic, and you have correlations on either side of zero and no correlations really getting outside of 0.5 in either direction, which tells you not very correlated. Stocks can be up, be down, be sideways, and the US dollar market will do its own thing. Now you look to the right of that, you look at the most recent couple of years, and it's been a pretty stark negative correlation between the dollar and the S&P 500, similar to how the VIX fear gauge relates to the stock market as well, which is stock market up, fear gauge down, stock market down, fear gauge up. And as this correlation sets in and you see the dollar race back towards some of its highs against the Chinese yuan, against the Japanese yen, against the Australian dollar, and even starting to beat up on some of those European major currencies like the euro, like the pound, has taken back a few hundred pips from both in the last month of trading. Wonder whether or not there is another recession in the works here, or at least some stock fear building outside of just that Chinese market. When you look at these historical run-ups in US dollar, you look at these correlations to the US stock market, and you're starting to see some of that US stock downside in the last couple of days as US dollar is rallying higher. And I did want to conclude with some of the performance that we've seen in the last month. And in the last month, Chinese stocks have been getting hit pretty hard, but also NASDAQ has given up almost 1,000 points in the last month of trading. S&Ps have given up a few percentage points, same with Dow Jones. And in that same time, the US dollar has put in 350 pips against the euro, 400 pips against the pound, 500 pips against the Australian dollar, and almost 1,000 pips against the Japanese yen, over 800 pips against the Japanese yen in the last month of action since mid-July. Pretty crazy move. And you have here on your right the dollar versus the yen, and you see that we're back above 145, which has been historically a high. Last year, you'll remember that this market got above 150 for a handful of days before coming back lower to more normal territory around 130 and 140. But yeah, you can't help but look at all of those historical correlations and how, the VIX, the fear gauge for that stock market, not really moving anywhere. It's up the last couple of days, but still around 16 when traditionally I think people are alerted to a potential recession or a downturn in the economy when it gets above 20 or 30. But then you look at this US dollar market that since the pandemic has maybe been a better fear gauge than that VIX, which is really just takes the scope of the S&P 500 stocks, which 7% of that is Apple, 7% of that is Microsoft, and then a bunch of other percentage points are just Amazon and Google and a couple of other names. This dollar might take in more information around the interest rate environment, around the global aspect, not just U.S. stocks here. It might be a better fear gauge, and you're seeing this potential fear gauge really run up. Now, of course, similar to that VIX market, it can fall just as quickly as it ascends, and you can see, the data in China turn around, and the Australian dollar market turn around, and the Japanese yen market turn around on this US dollar. We saw it the early part of this year, remember? But right now, with the US dollar up so significantly in the last month, and pressing some of these historical highs against the yuan, against the Australian dollar as well. Take a look at that chart. Wondering if a global recession is afoot here.